Welcome back to the Week in AI. I'm Kevin Cook, your field guide and storyteller for the fascinating arena of artificial intelligence. Again, we're going to go through my top 5 to 8 things that really stood out this past week in AI. Right here, you're looking at Sarah Friar, who is the CFO for OpenAI, talking about them buying Jony Ive's company for $6.5 billion. And I'm not going to play the audio this week on these because I don't have a bunch of videos, but she's reiterating the idea that they're creating an interface for the AI era that turns hardware into the next subscription layer. So this is how far out Sam Altman is thinking. A multimodal future and new business models to match. So a lot of these good videos are from Vitrupo. Find that account on X at Vitrupo, and you can watch this video. It's just like 2 minutes long. All right. That wasn't my number one, but I had Sarah up first. So there she is. All right. My number one is what Google did with Reddit. Google basically inked an exclusive deal with Reddit to have access to those conversations. Reddit gets 100 million visitors a day, and it's been around for 20 years. There's a treasure trove of data there. And this speaks to the idea that I often talk about that, in the AI race, like if you look at Nvidia is going to not just train cars for autonomous driving, but they're going to train robots. And we need those autonomous machines to be safe and reliable, not just affordable, right? Before they hurt humans, they need to be trained safely and reliably. So there's not enough data in the world to do that. So Jensen and his engineers can create synthetic data to train, just like, going back to the roots of real AI here. When Google DeepMind cracked the game of Go, it learned in a matter of hours because once it knew the rules, it could play billions of iterations of games against itself and get better and better and better. Well, that's what you want to do with robots, definitely. And so that's why Jensen talks about simulation and synthetic data. So it's cool to hear Sundar from Google, thinking in these terms. Like he's gonna tap into a data set that nobody else has rights to but him with Reddit. Okay. Speaking of Nvidia, they reported earnings this week. So I'm taping this on Thursday morning. Nvidia reported last night. So I just published this article this morning. Nvidia earnings, 3 giga takeaways you can find on Zax.com. Just search me, my name, Kevin Cook, or Nvidia Giga or something like that. And what I wanted to focus on was, first of all, they have the write-downs from China. They can't sell the H20s. How big was that going to be? And we sorted that out. Like, the market shouldn't care about that because I mentioned last week I did an interview with TechCrunch on last Friday, and they published their article on Tuesday, and I was the only analyst featured in this, why export restrictions aren't the only thing to pay attention to. So you can find that on TechCrunch from Becca. A good piece, fun talking to them. Back to my piece. So the bigger question about China is what Jensen talks about, and I write about in this article, that it's a 50 billion potential addressable market in AI. And Jensen thinks it's not just that he wants Nvidia to have access to that 50 billion. It's not about the money. It's that he thinks if we don't serve China with AI hardware and software, they're going to go build their own and do completely different things. What if we had them build on our platforms, is his point. So at the end of this article, I highlight about 4 paragraphs from the conference call, or from the press release. I'm sorry, from his opening remarks, where he really sums up. He really thought this through, and he's trying to teach us something that most analysts and investors aren't talking about, and that's why we should sell to China. So Jensen, why we need to sell our technology to China, and because it creates a symbiotic relationship that will be good for American AI in our infrastructure. And then the other big thing I talk about in here is, we're all trying to figure out what the Grace Blackwell rollout is like, what the ramp is. They delivered 1,500 in April. Well, what were we expecting for Q2? Are they going to April ended the Q1, so we're in the first month of their Q2. What are they going to do? Well, I said in my interview with TechCrunch, it could be like 10,000 would be nice, 5,000 would not be good. Well, Colette Kress, the CFO, said they're doing 1,000 a week right now. They're almost at 1,000 run rate. And so I'm thinking 13 weeks in this quarter, they could do over 15,000. And these machines cost $3 million a piece. This is the GB200 NVLink 72. So if they do 15,000 to $3 million, that's $45 billion for the quarter. That's their guidance. That's their total revenue guidance for the quarter is $45 billion. So I think this could be a $50 billion quarter if this Grace Blackwell 200 ramp continues. All right, so that's Nvidia. Find that article. Let's talk about jobs. Jobs going away. The CEO of Anthropic did an interview this week with Axios. Behind the curtain, a white-collar bloodbath. I'm kind of making fun because, I've been studying this for over 8 years. I wrote my first piece in 2016 based on a study from Oxford, Martin, and Citi that as much as 75% of jobs could be eliminated in China and India because of automation. And I thought that would be terrible, right? For the two largest countries with populations exceeding 2 billion combined to have that many people out of work because of automation. So I haven't been that worried about lawyers, doctors, accountants, etc. But, so this is kind of an interesting theme. Dario wants to sound the alarm because he said we should prepare. We should prepare for 10 to 20% unemployment in what time frame did he say here? In the next 1 to 5 years, 10 to 20% unemployment in the next 5 years. So that's pretty steep. So he thinks governments and companies are sugarcoating it, and we should have real conversations about what's coming to prepare people and the nation and the economy. He says few are paying attention. So I thought that, that was interesting, right? It doesn't serve him to wave the caution flag for his company, Anthropic. All right, let's move on here. So that was the job. We did Sarah. All right, let's talk energy because energy is obviously central to this. I keep kicking myself for not buying some of these energy stocks. I want to share this perspective on Oklo. Don Corleone 77, by the way, he puts out tons of research every morning, and he shared the analysis from William Blair initiating coverage on Oklo a couple of days ago. The title of their report was Advanced SMR Owner-Operator Business Model Initiating at Outperform. So these are the small modular reactors that can serve a data center. I want to highlight here their rationale. So Oklo is developing Generation 4 small modular reactors and employing a build, own, and operate strategy that is standout in the industry. So William Blair analysts did their homework here, probably visited the company, looked at the others. It will accelerate regulatory timelines and improve unit economics by capturing the premium on clean baseload electricity through direct power purchasing agreements. Blair says they forecast SMRs to be large participants in the nuclear renaissance with a path toward 50 gigawatts by 2040. And Oklo is best positioned for market adoption, thus their outperform rating. So 50 gigawatts by 2040. Boy, if we remember last week, we talked about Eric Schmidt from Google saying, hey, we need 90 gigawatts. So we're only going to have 50 by 2040. And, it's an area to look at. And that's why I look at some of the ETFs like NukeZ and another one I can't think of. We'll talk about it on Friday. Oh, hey, join us. We're going to do our space again on Friday at noon Central. Myself and Ethan Feller are going to share our top 6 events in AI this week. And I'm, doing a scatter plot here of about 8. So what am I up to now? So that's up to number 5. Okay, cool. Keep going here. Where's my next guy? Okay, here he is. So Robert Scoble is an excellent follow on X. goes by @Scobleizer. Kind of cool. This guy wrote, he worked for Microsoft 20 years ago. I think he even worked for Apple. He's been around Silicon Valley for a while. He wrote a book called The Infinite Retina with Irina Cronin about AI, AR, VR, and all the cool stuff that they see coming. So what? Oh, so he said, when I got up this morning, I had no clue I would be invited to see Jeremy Bailenson speak at Stanford University. He runs Stanford's holodeck research XR, AR, VR lab. So he's got this, and he shows this 32-minute clip, which you can watch, of Jeremy Bailenson talking about AR and VR. And why should you listen to this guy? Well, you may recall that in the book by Peter Diamandis and Stephen Kotler, The Future is Faster Than You Think, they did a little profile of Jeremy. And I always want to read this to you because this is so cool. This is how far back this guy's expertise goes, and you wouldn't even know it looking at him because he doesn't look that old. They write, in 2001, Jeremy Bailenson, a Stanford psychologist and virtual reality pioneer, packed up most of the gear in his lab, put it on a plane, and flew to Washington, D.C. He was heading to the Federal Judicial Center to host a conference for judges on the power of virtual reality in a courtroom. And since nothing could be more convincing than a demonstration, Bailenson had the judges put on some VR goggles and walk the plank. I'm going to leave it there because it's a cool thing. If you haven't read Diamandis' book, The Future is Faster Than You Think, you should. That's where I first learned about Rigetti in quantum computing and also about Jeremy Bailenson. But what he was able to teach judges, highly educated, important decision makers in our society, about the nature of reality and how we can be fooled by perception, but also use VR as a simulation tool to teach things. So I recommend that. Again, follow Scobleizer here. All right, so that's 6, 7. Let's see what my 7 was. Might have to go back into my, I have a special folder here on X. I just call it The Week in AI. So scroll down. Oh, here we go. Okay. Have you ever heard of 11 Labs? They were one of the first to create synthetic voice, for voiceovers, that sort of thing. Apparently, this guy might be having a little bit of fun, but he thinks that, their business model might have been disrupted already. And so he says, this voice AI is open source, ultra expressive, and actually beats 11 Labs in quality. I'm not going to tell you which one it is, but you can follow this guy. He says it has no paywalls, no weird licensing, just pure controllable speech synthesis, built for creators and devs. Here's the model everyone is switching to. And I know a little bit about this because I create my own videos with a platform called Nvidia, where I write the script and it uses AI to match images to my script. And then it has a narrator, and the narrator sounds like a human. So it looks, so this nature of this technology, stuff is being disrupted quickly. So now the reason I mentioned this, looking at the broader context, here's another great follow on X. Ethan Mollick, he's a professor at Wharton studying AI, innovation, and startups. Posts a ton of great content on X. A lot of research studies, meta studies, statistics. Here's just an observation. He says, I've asked this before, but I have yet to receive an answer. For my VC followers, venture capital, what is your theory of AI, AGI, artificial general intelligence, that lets you fund a venture with a 5 to 9 year exit horizon and feel good that it will not be disrupted by AI? So that's his question. He says investment patterns don't match VC talk about AGI timelines. So this connects to the 11 Labs thing. Like, the VC who put money in 11 Labs, some of them may not come out okay because that company may be disrupted already. I don't know for sure. I'm just sharing these different points of view, but it is a potential example of the pace of innovation in AI is so fast now that really, how can VC have this time horizon that gives them that big fat 100x return if they have no idea what's going to happen with AI and AGI over the next few years. This guy left a good comment here. It's a fair challenge. Well, somebody left a really good comment that maybe, and you can look at the comments yourself for this post for Easy Malik at eMalik, that maybe VC will do stuff now. They'll throw out, $500,000 to $2 million just to be involved, and they learn. And even though that company may not pan out, it might lead them to the next one. I've heard founders talk before. I'm not founders, venture capitalists who say that, they just spend all day learning, right? They have smart young people come into their office, teach them about a new technology. And so even if they don't invest, they'll learn something new. And, it might lead to their next great investment because they learned something new. All right. That was number 7. Let's see where number 8 is. So I think it's just back up. I got to go back to the top. Here it is. Brett Addock. Brett Addock is the founder of Figure Robots. Let me make sure that it's called, at Figure Robot. And I think he was the founder of Archer Aviation too. So this guy is like, Archer Aviation. Have you ridden in one of these, vertical takeoff and landing vehicles? I haven't. And yet he's already onto robots. So he's a must follow too. And so this is kind of a cool post. He says, the world still doesn't understand how massive a humanoid robot company can be at scale. Nearly half of global GDP is human labor. Revenues can be reoccurring. Humans are subscriptions. I'm not sure what he means there. Humans are subscriptions. Maybe like every human will subscribe to have their own robot. The cost of intelligence will collapse as fleet data compounds. So, there's this talk about, there's going to be 100 million robots by 2030 or something like that. And Jensen says it will be the next multi-trillion-dollar industry. So Brett is trying to put it in perspective here for people who still don't get it, like how much GDP is already human labor. And if you replace that with robots, it's going to take, some form of subscription. What else? And circling back to VC, you got to read the first comment below Brett's. Here's a VC guy. I don't know where he made his money. He doesn't say, but he made enough to invest almost 20 million in Figure Robots with Brett. And he says he wasn't sure at first. He's like, I'll do $1 million. Well, and then the more he learned, the more he did his due diligence. He was like, maybe 3 million, 5 million, 10 million. And he couldn't believe that everything he learned was confirming this huge frontier of opportunity in robotics, especially humanoid robots, and that nobody else was talking about it. He ended up investing like 19 million. So I thought that was pretty fascinating. All right. So those were my 8 big things that happened this week in AI. We'll talk to you next week.